All right. So, welcome everyone to the 2026 Ori Trading Group Mentorship. What we're going to be doing today, same thing as we did last week. We're going to be looking at the previous week's trading as well as the weekly projection for the next week, where I think the market is going. So, I'm only focused on trading gold, micro gold coin, or just micro gold, MGC1. That's the symbol or the ticker symbol. What we're looking at is the current weekly chart. The reason why we're looking at the weekly is because we're in the middle of May. Um, we don't really have any more other information. I mean, we can look at the monthly to start. I usually just look at the monthly at the beginning of each month, but actually, now that I think about it, looking at it at the beginning of each week is also a good idea because what we have here is we have a range created in March. As you look at the bottom, you see range created in March. Then we have the April candle, which is within March's range, meaning the high and low is within the high and low of March. And then what we have for May, we already traded to the low of March. And after trading to the low of March in the first week of May, we've traded directly, we've gone bullish after going to taking the liquidity for April, rather. So let's go to the weekly. What we see is this past week, we used the April's low as sell side liquidity, and from there traded away from sell side liquidity towards the bullish um, buy side liquidity. So we already took this week's, which is April 27th, the week of April 27th, the trading data there. We already went to buy side in this week's trading. So as a result of that, I still think this market is bullish. I mean, on the higher time frame for sure, on the monthly is bullish, but on the weekly, we took buy side, and there's still more buy side targets to go. Now, just because I have a bias doesn't mean that that's exactly what's going to happen. However, I do know for the coming week that I still want to trade longs. I still think it's going to go up because it took sell side liquidity, traded towards buy side liquidity, and it's still hovering at a higher price, higher opening price. Sorry, it closed higher than the previous week's open. So I believe that just means we're going to continue going up. Um, so literally what I wrote is the previous week's candle was a traditional weekly buy. Like I said, it took the previous week's sell side liquidity and then traded up. So it's a traditional buy week, or according to ICT, it would be a market maker buy model. And so I'm still thinking it's going to be bullish going into this upcoming week. We can go down in the daily. Um, what we have here is a daily inversion fair value gap that it created following Wednesday's trading session. The reason why is because it was before it became an inversion fair value gap, it was a daily SIBI. or a sell side imbalance, buy side inefficiency. And then from there, this candle, Wednesday's candle closed above this daily price delivery array. And from there, I just want to see it use this inversion fair value gap as a price delivery array or PD array to continue going up, take the previous week's high that we labeled, and eventually just continue to go up, even taking April's high. After taking April's low, I definitely just want to see it gravitate towards the high because I believe the market is bullish. All right, so that's the weekly projection going into next week. That's what I'm expecting. We could even go down on entry time frame real quick just to see if there's any other data. Um, so this is what I have labeled. I have the new week opening gaps labeled, the daily inversion for value gap. And obviously I don't have the upcoming week's new week opening gap labeled yet, just because the market hasn't opened, so I don't know where it's going to open to draw the gap. But we'll trade what we see, still bullish. On the entry time frame, what we have here at the bottom of this candle here, which is the previous day low. You can see on the top left, it gives us the exact open, high, low, close value points. You can also press and hold, and it'll bring up a little pop-up window telling us exactly that data. So that low is 4673.6. That's the previous day's low. And then this low here is 4671.1. That's the New York session low for May 6th. Because they're both so close together on the entry time frame, this to me looks like a prime liquidity area that I've seen before. The market may want to disrupt before it goes all the way back up and take the previous week high. So I would like to get into the market here after it takes this liquidity session. And especially here, it didn't actually take this or use this 15-minute BISI as a reason to go up. So I would like to take a trade. As you can see here, I labeled. I would like to take a trade from here, going all the way up to the previous week's high. And I would like for it to give me a 6-to-1 because that's what I'm shooting for. But if it gets up here, most likely I'm just gonna take all of my trade out or most of my trade out and then leave a runner to see if it wants to get to the 6-to-1 target. But yeah, going into next week, that's the one trade that I see so far. And we have a bullish bias on the weekly. On the weekly, I want to see it at the very least take this previous week high. And then on the larger monthly, I want to see it take the April's high. All right, really simple. All right, so now let's move back. Okay, now let's do our weekly review. Make sure. All right, perfect. So we're gonna go into replay mode just so that we can do the previous week's review. All right. Okay. So you can use last week's live stream as a frame of reference in order to see exactly how I labeled the market going into last week. For right now, I'm being honest, I'm too lazy to redraw everything on my chart right now. I'll point out exactly what values or what areas I was looking at. Um, so just pay close attention to what I'm saying, as well as where I may be indicating or using the marker here. All right. So going into this previous week, this is what the market looked like we had the previous week low labeled here, as well as we had previous week high labeled here. This is on the weekly chart. So this one candle shows us the data for the low and the high. And then I'm just going to go down to the entry time frame. So this is what the market looked like last Sunday. All right. The market opened. Okay. All right. And immediately what I had labeled was this right here, which is the previous day's low that I'm marking right now. You can see on the top left. That low was 4570.3. And then we also had the previous day's high, which is 4640.5. So I had the lit low as well as the high labeled. I'm on my entry time frame. I want to see if we get a fair value gap. Um, Also, obviously, I'm paying attention to this level here. Let's see if we get another fair value gap there. So literally, all I did was I labeled previous day low, previous day high. I put an alert just to tell me, or I want the market to tell me whenever it reaches those areas so I can view how the market reacts there, using it as dynamic support and resistance. I remember going into this week, I thought, all right, we're gonna have we could have some sort of bearish movement towards the previous day's low, or the previous week's low. So I had the April low with an alert, the previous day low with an alert, previous day high with an alert. Just waiting to see it get there. Okay, so we immediately get to the previous day's low, right, on Monday. And however, that low, it's only, let's see on the top left. I can just grab it. That low is 4535.8. And this low is 4522.2. So it's only about 13 points away. This to me looks like a prime liquidity area. What is priming again? The lower low is on the left and the higher low is on the right. And usually whenever the market gives lows that are that close together, the market usually likes to use that as liquidity grab, basically trade down using a wick and then trade in the opposite direction. So that's what I'm anticipating after seeing this. What I see here on Monday is we have a automatically what I would have seen at the close of the 6:15 a.m. candle. So at 6:30, when that candle closed, I will have seen, ooh, we formed a 15-minute SIBI there. Why is that important? Because we formed that SIBI, and it overlaps this low, which is Friday's low, Friday, May 1st's low. So automatically, I will have, sorry, I mislabeled that so far. Whenever I stream, my computer like kind of starts to glitch out a little bit, so excuse the slow movement. I'm not sure if you can even see it. All right. So there we have this 15-minute SIBI, and it overlaps the previous day's low. We also have extenuating liquidity below. So at this point, market's just open. Um, because I have the expectation of it getting down to this low I wanted to see here, right? I'm I didn't yet take that trade to go lower, basically, is what I'm saying, right? Still haven't taken a trade, and then boom, we get right here to the previous week's low. So now I don't even care about this 15-minute city anymore. Like that was cool, but again, I didn't take this trade. Why? Because we still have more liquidity below, and the market is trading choppy. So I see the alert. I'm probably watching the market from here 6:15 a.m. all the way until we get to the previous week's low. And like by watching, I just mean every 15 minutes. I'm just checking to see how the next 15-minute candle prints. Or every hour, I'm just checking in. Still have this alert here. So obviously, I'm not really paying too much attention to the market. 12 p.m. comes, boom, we get to the previous week's low. So now I want to watch to see how these candles form around here at this area. Now, we pierce this liquidity area here, a major liquidity area on the entry time frame, and automatically what I'm looking for to see, are there any major fair value gaps that are forming? And the reason why I'm zooming in so much is because if you didn't zoom in, you wouldn't have been able to see there is actually a fair value gap that forms on the 11:45 candle. So at 12 p.m. EST, when the 11:45 candle closes, we actually have a 15-minute SIBI that forms. Now, the way that we draw SIBIs is usually the previous candles. Sorry, let me label this so it's easier to see. It's usually the previous candle's low and then the next candle's high, right? So technically, we could label this SIBI between this candle's low, where I'm showing it the marker or the cursor, and then the next candle's high. However, because there is a gap between the previous candle's close, the current candle's open, and then the current candle's close, and the next candle's open, we include these little gaps between each 15-minute candles within our fair value gap. Why? Because fair value gaps are supposed to indicate fair value, or it's an inefficiency in the market. And the fact that there is a gap between this market or this candle's close and this candle's open, and then this candle's open, sorry, this candle's closed, and then this candle's open, that is an indication of fair value not being met within this zone. So that's why we include that entire area as a, or in the fair value gap that we label here, okay? So automatically I would have zoomed in at 12, I would have zoomed in after seeing it pierce this area, zoomed in, label this SIBI. I don't really see any other uh, sell side liquidity that I want to take, especially because after it reaches this large sell side liquidity area on the higher time frame, because remember this is April's low labeled here, I want to see if we get a reversal. So I'm not automatically taking a sell trade from the SIBI. I want to see if the SIBI turns into an inversion fair value gap. That's immediately what I'm thinking at 12 p.m. on Monday. So now I'm just watching the market. Let's see if we get, oh, and I am watching the market, but I'm also labeling this candle's close, which is the top of this 15-minute SIBI, I'm using I usually use the trend line tool here. Um, but I'll bring the trend line tool down, and then after putting the trend line tool on this candle's close, I would have put an alert on that trend line and then labeled it 15-minute inversion fair value gap, and then made sure I get the alert once I get a 15-minute candle close above that area. So I literally most of the time I'm looking at the market or looking at the market, I'm just kind of paying attention to my notifications and I'm labeling exactly like what I think is going to happen. So I labeled a 15-minute inversion fair value gap if we get the candle close above. So at 12, literally at 12 when that 11:45 candle closes, and sorry, 12:15 when this 11 or when this 12 p.m. candle closes, I label this is a 15-minute SIBI. Then I label up here with the trend line, set an alert for if we get a 15-minute close above this area. So I step away from the market, just paying attention to my notifications. If I get a notification, I'm doing whatever else I'm doing. All right. And this is usually when I stop really even paying attention at all to the market. We don't really get a close above it. So we don't get a trade on Monday, which is fine. Um, there is technically right here with this 15-minute um, city that we labeled overlapping the previous day's low or Friday's low. Friday May 1st low. Um, at the consequent encroachment, you could have taken a trade downward towards the more sell side liquidity, but it was too choppy. I didn't really want to take that trade, so I didn't. But here was a possible trade that you could have taken. We didn't take that trade because I didn't like how choppy the market was. So now we're still waiting. We're trying to see, is this 15-minute SIBI going to be turned into an inversion fair value gap? Basically, we have Tuesdays open right here at the, hold up, let me press a couple more candles. All right, that's the open. All right, so we already took that previous week's low or the April's low. I want to see if we get an inversion right here. All right, and then boom, right at 9 p.m. EST or the start of Tuesday's daily candle, we get the notification of this now instead of it being a 15-minute SIBI, it gets turned into a 15-minute inversion fair value gap. And as a result, I'm immediately, because we took the combination of taking a major liquidity area on the higher time frame, and then we got ensuing a 15-minute inversion fair value gap right after it, that is indication of, all right, I want to see us take some buy side liquidity. So what are the targets after seeing that? Like that's completely our model. What do I want to see? We have our current weeks, or at the time it was the um, May May 4th. Um, yeah, it's the May 4th um, new week opening gap. So that's the main area that I want to see price gravitate towards. But we also have the New York AM session liquidity area or the buy side liquidity area because that's the New York AM session high. The reason why we're looking at session highs is because when we have tight, choppy markets like this, usually liquidity areas are not only the daily highs, but also session highs. So we have the New York session right here labeled with our tool here. This is the um, trading session indicator, which is an indicator that you can find on um, TradingView, which is the platform that we're using. You also have the London session, which is between 3 a.m. EST all the way to 11 a.m. EST. So London highs right around in this area. It's not as important because obviously you see we're chopping through that session. And then we also have Asia session, which is between 6 p.m. or 7 p.m. EST all the way to about 2 a.m. Um, EST, or sorry, 7 p.m. EST all the way to 2 a.m. EST. So we're just paying attention to obviously New York session high, um, as well as the new week opening gap up here. So that would be the targets. And ensuing, this is the trade that we took on Tuesday. Um, I remember I was actually waiting for a for this trade on Tuesday. I was actually waiting to see if it gets to the new week opening gap. So I ended up actually um, the trade just got to my stop loss, and I put my stop loss at a 1-to-1. I honestly just wanted to see it get back up here to this new week opening gap area that we always label in orange. So I was looking for a 4-to-1 trade. We ended up getting a 1-to-1. The reason why it was a 1-to-1 is because I got in a little bit late. Didn't get the perfect entry. I would have set the entry as a buy limit as soon as I got this candle here. Set it as a buy limit here. Um, so yeah, we would have honestly I think I fell asleep even because the market. This is like overnight now, so this is like you see 2 a.m. EST. Um, yeah, I fell asleep. Pretty much woke up around this time here that I'm labeling. I wake up around 7:30 that morning. Um, expecting the market to get up here after waking up at 7 a.m. I would have seen, oh, I'm in profit. And um, yeah, so I saw we got up here to this target. I wanted to see it go up higher. So what I said to myself was, if we get a break below um, this 15-minute order block here, this order block is a successive two down close candles in an uptrend. So if we got a break below there, i.e. if we get a 15-minute close below, I will have closed the trade or allowed the trade to hit my stop loss. I wanted the trade to go higher, and right there at 12:15 or at 12:30 when that candle closed, I will have seen that and I would have exited the trade. I ended up only taking a 1-to-1. So that was a successful trade for Tuesday, even if I didn't get all the way up here. The reason why I set that parameter for myself of closing the trade if it gets below this 15-minute order block is because we reached the New York AM session high. And so after seeing that us reach this high, and because I have a conviction in believing that the market is going to go higher, I don't want to see us start breaking bullish PD arrays like this order block. So as soon as we broke this order block, like conviction of it going higher, I take my money out. There's no reason for me to be in the trade anymore. Even if it does continue to go higher, it broke that parameter, and because it broke that parameter, that tells me this is now a choppy market. So let's just see how it trades for the rest of that day. Um, yeah, doesn't really go higher. All right, and then we have market open for Wednesday's daily candle, right? So we have this one trade that we made a 1-to-1 on. Okay, so going into the next day, I will have labeled we have previous day low here, or sorry, previous day low here, previous day high here in this area. So now obviously I'm thinking that the market wants to continue going up after taking this major liquidity area and then forming that 15-minute inversion fair value gap, right? That we labeled. So I can go back just to bring it up, right? So remember we had this complex that was formed. So I'm thinking, all right, I want to see the market go bullish after taking the previous week's low. So We get to the previous day high here. I have my alert, obviously, previous day high, previous day low. I get the alert for the previous day high at this um, 7 p.m. EST candle. And then we get the formation of a 15-minute fair value gap right there. So a 15-minute BISI there at Tuesday's high. Okay. All right. As soon as we get that, I'm immediately labeling this 15-minute BISI. And then as soon as we get the formation of that 15-minute BISI, not only am I labeling it, but I'm setting a buy limit order at the top of that 15-minute BISI. Why? Because I have conviction that the market's going to continue going up. I want to see it at the very least get to this new week opening gap or the current week's new week opening gap. But because we took the previous week's high, I want to see if we want to shoot for the previous week, the previous week's low, rather. I want to see if we want to shoot for the previous week's high. And let's give ourselves more data. This is Friday, Thursday, Wednesday, Tuesday, Monday. There we go. So that previous week's high is all the way up here at top left. We have 47.45. So I want to see if we trade from this 15-minute BISI that we have labeled, right? This is on Tuesday night after the market opens for Wednesday's daily candle. I want to see if we get from that 15-minute BISI all the way up to 47.45. So quite literally, when that 15-minute BISI forms, and you can see this is what happened in our group chat. So 7:30, when that 7:15 15-minute candle closes, I set the buy limit order from the 15-minute BISI all the way to the previous week's high. Um, and so now we watch the trade. We get knocked into the trade, right? The position works. All right, we start to go up. And what I have now, what I've done is I'm no longer looking at the market. I get into this 15-minute BISI trade. I set obviously I have my stop loss and I have my take profit order, all right? I set a at the bottom of this 15-minute BISI, I use my trend line and I put a trend line down here and I put an alert on that trend line. At a 15-minute candle close below here, this creates a 15-minute inversion fair value gap. And if it does that, I'm no longer interested in taking the trade buy. Why? Because if we get the 15-minute inversion fair value gap at this high after taking the previous week's low, we are re-entering the range. This becomes a choppy market, no longer interested in trading it, take a small loss, right? So, sorry, the markets or the, okay, okay. So I set the alert at the bottom of this 15-minute BISI. I set an alert here at the new week opening gap that we have. At the time, this green labeled area is the daily inversion fair value gap, but at that time, because we hadn't yet gotten a daily close above it, this is labeled as a daily SIBI, right? So you can look at last week's live stream in order to see that. So at the halfway part mark, I have an alert there. At the top, I have an alert there. And also at obviously at the previous week's high up here. Yeah, somewhere up here. Previous week's high. Is that this Tuesday? Yeah. So up here that I'm circling around right now, the cursor top left, I also have an alert there. So all I'm doing is when it reaches these major areas, I get an alert, I get a notification, I take a look at the market, I see how on our entry time frame on the 15 minute, if we get the formation of BISIs or if we get inversion fair value gaps at those areas. All right. So like literally not looking at the market, not looking at the market, not looking at the market, get a notification. So now for 15 minutes, I'm watching, or no, I'm not watching. I get the notification, I look at the market. I want to see now, all right, with this next 15-minute candle, are we going to get a formation of a BISI? So now I see, all right, we reached this part of the market here, and then I'll set a 15-minute timer on my phone. I come back, let's see. All right, so we get the formation of a balanced price range. Balanced price range is dignified by um, a directional candle in one direction, and then the very next candle was a directional candle up taking up the entire previous candle's range in the opposite direction. So there's no fair value gap formed there. So that makes it a balanced price range. So we get the balanced price range formed there. All right. So now at this point in the market, I'm just watching C. I get that, or after that 15 minutes, I see this forms here. So now I'm actually watching the market because the formation of the balanced price range only tells us that our price is balanced here. So I don't know if it's going to go down lower or higher. At this point, I haven't moved up my stop loss. I still have the little trend line alert below this 15-minute BISI to see if it, at this point, like price could completely reverse. So I'm still watching the market at this point, right? Still watching the market, kind of watching it, coming back and forth. All right. And I had an alert here at the top of the new week opening gap just to see what happens there, if it forms anything. We, at the end of this, what is that? That is 10:15 EST PM, 10:15 PM EST. We get the formation of this um, very, very, very tiny fair value gap there. So now we get this fair value gap here at the top of the new week opening gap, right? I'm not gonna label it because it's really tiny, but you see if we zoom in, hello, you'll see, all right, there's a gap between this previous candle's high and then the next candle's low. All right, so fair value gap there. I want to see how price treats that fair value gap at that point. Very next candle, the way it closes is it goes into the fair value gap and then it closes bullish. At this point, I I have that tells me confirmation. Okay, we want to continue reaching for higher prices above this new week opening gap, right? And in that case, I get rid of my alert down here. I don't even want to see it get back down here. I move up my stop loss to just below our balanced price range here, right? That I'm labeling or showing. Like, I know it can be really small, but just zoom in on YouTube to see. That's the balanced price range. I move up my stop loss to, I think, the low of the fair value gap right before the balanced price range. Okay. And now I just want to see it continue going up. Let's see. Let's see what time this is. So around this time is when I start getting sleepy. Um, and that's really important because if you look at price, at the time, this is the daily SIBI. At the 50% or the consequent encroachment of this daily SIBI, we get the formation of another 15-minute BISI or 15-minute fair value gap. So now at this point, I'm getting tired. I want to see that we utilize this 15-minute BISI. I label it. Again, I put another trend line alert at the low of the BISI here. And if we get a 15-minute candle close below it, that tells me that it probably wants to seek a little bit of sell side liquidity. So I set the alert there. I have the BISI here. Because the BISI forms here, I'm still in belief of it wanting to go up. But what I want to see now is I want to see a candle close above the formation of the BISI, right? Or a positive candle close above it, right? So at this point, we get the candle close above the high of the candle that forms that BISI. And this is, what time is this? This is 12:15 EST, 12:15 a.m. EST on Wednesday. At this point, I'm asleep. I'm going to sleep as soon as I see this candle close. The reason why I'm going to sleep is because I have conviction that it just utilized one, two, three major BISIs. So this tells me this market is giving me a lot of inefficient movement directly towards some bullish PD array. So at that point, I'm going to sleep because I have conviction it wants to continue gravitating up. Okay. So then, I mean, market does all this. Um, Pretty much I'm asleep. We can also see at this point, this is the point, or this is touching the 0.75, or the one of the quarterly areas or quarterly divisions of the daily SIBI that we had labeled. So this BISI gets labeled, and this BISI is also overlapping this major high, which is Friday's high. So this gets labeled. I don't label it until later on when I wake up that morning. But mm, all right. So yeah, so I wake up actually that morning around like 7:15, 7:30 a.m. I'm watching the market. Um, and I think actually at this point, um, I had already taken like all of the I had taken the extent of the trade that I wanted to take, which is a one, excuse me, which is a 1 to 6 trade. So I think I had already woken up and I was oh no, that's not what happened. I woke up really early that morning, just like a habit. And by the time I had woken up, I had already seen, oh, we have pretty much reached my 1 to 6 target. Woke up basically was in profit. Or my trade already closed because it reached my take profit order. Why did it reverse here? I didn't label it. I don't have it labeled right now, but at the time, you can before until last week's live stream, this is a major new week opening gap area that I had labeled. It already reached it. That was my final take profit area for the 1 to 6 trade or the 6 to 1 trade for the reward. So that was, oh, sorry. No, it wasn't a new week opening gap. That was just the previous week high. It reached the previous week high. And that was my 6 to 1 trade. So I took the trade there. So far we have 2 trades for the week that ended up working out. That's the that was a really good trade. It was an amazing trade because as you can see, I had it labeled at all these different major high time frame areas, it formed a BISI in the direction or a fair value gap in the direction of the liquidity that um, we predicted the market would seek. So it seeked all the way up to the previous week's high after taking the previous week's low. Classic, like Wednesday's trade or Wednesday's price action is a classic market maker buy model. Um, so it was perfect. Pretty much we reached our weekly target, so I wasn't really expecting, especially knowing that the previous week that we're talking about now is a NFP or non-farm payrolls. Usually NFP during Friday is not usually a good day to trade. It usually is like the data shows after doing a lot of data analysis, the data shows that it's usually very choppy markets that happen on those Fridays. Not always, but usually about 80% of the time it's choppy. Usually not a good day to trade. So we reached the previous week's high on Wednesday, and I mean, once we reach the weekly target, um, I'm not really pushing too hard to take another trade, because we already reached the weekly target. Um, One of the more important things that I've learned in trading is like learning to be content. Um, and I mean, once we reach our weekly target, I'm not really looking for much more than that. I want to be content. I don't really want to like risk any more money because we our analysis was correct. And so let's reward the trader by being cautious. So Wednesday, the rest of Wednesday was a wash. I'm not looking at the market anymore. Wednesday's high forms here. We get a 15-minute BISI that forms. This is the start of Thursday. We get a 15-minute BISI that starts there. We had already reached the previous week's high. So I'm looking at this market and I'm like, okay, we reached previous week high. Are we going to now use this 15-minute BISI that overlaps the previous week's high, right? as an inversion fair value gap. I'm guessing here, right? I'm like automatically thinking, okay, are we going to get a market maker sell model after reaching our weekly target? To go directly towards um, this daily inversion fair value gap. Because remember, Wednesday's candle closes. This means on the daily, we got a daily close above the this daily SIBI that we labeled. So now this becomes an inversion fair value gap. Does this 15-minute BISI that we have here turn into an inversion fair value gap to gravitate into this longer time frame or larger time frame um, liquidity area, right? So that was what I was thinking going into Thursday. Um, let's see, does it happen? Um, Mind you, I don't know if I'm right about that because it could this 15-minute BISI that we have labeled here that I'm showing 2:30 p.m. EST, it could be used as a reason to continue going up. But because we already reached the previous week's high, I'm not anticipating to take another buy trade. I'm not anticipating to take any trade, but if I were to take a trade, knowing how the market moves, I want to see it gravitate into this inversion for value gap first and then use this longer time frame area as a reason to go up and take even more longer time frame liquidity above the market. All right. So that was the idea or rationale for what I wanted to see going into Thursday. Obviously, at 12 a.m. or 12 p.m. EST on Thursday, we get the candle close below the 15-minute BISI here. So now this area becomes a 15-minute inversion fair value gap or bearish inversion fair value gap. So you could have used that in the very next candle, the 12:15 candle, or at 12:30, no, 12:15 when it goes into that area. You could have used that as a reason to take a short trade. I didn't do that because I don't really like how choppy the market is looking on Thursday, and then Thursday I wasn't even looking to take a trade anyway. Um, but yeah, you could have taken that trade and then close the trade at the top of it reaching the daily inversion fair value gap. So here's another trade that you could have taken. It was a very small trade. I wasn't really like looking to take that trade anyway because it wasn't it just wasn't it's a really small trade. Like it wasn't enough. I'm not expecting the market to like start to gravitate down now. Like I'm looking at the market and I'm like, oh, okay, like I want to see it now. I want to see it move into the inversion fair value gap as an analyst, but that doesn't mean that it's a viable trade for me to take. You could have taken that trade, you would have gotten a 2-to-1, which would have been decent, right? But I wasn't apt to take the trade. And it wouldn't have taken that long, but it would have taken the entire afternoon session for it to finally get down there, right? So there was another trade there, and then Friday we got previous day low labeled there, previous day high. So sorry, previous day high labeled there, previous day low labeled here. We overlap it as soon as Friday opens. We don't get an inversion fair value gap at all. There's no gap. It's still very choppy going into Friday. Also, Friday's NFP day, so I'm not expecting to check a trade in that day anyway. And then we get all the way to the end of Friday, and then we see there's no trade that's offered. It's just a really choppy market all of Friday. So yeah, that pretty much concludes the market review for the gold futures market or micro gold futures market for the week of May 4th. This is what I do every Saturday. I always do the weekly projection and I always do the review of the previous week's trades. As you can see, like this week we had a perfect or almost perfect because markets aren't perfect, but a pretty much great market maker buy model on Wednesday. We got 3 trades throughout the week using our system. Um, yeah, I hope you have a good rest of your weekend. If you're tuning in or if you're reviewing this, this is the blueprint that I'm giving you in this mentorship. Um, this is what we do every Saturday, Sunday, or the market opens at 6 p.m. EST, and we shall see. Um, how it maneuvers going into the next week. Again, like I said, I want to see it take out this entire liquidity complex, previous day low, New York session low from May 6th. Um, yeah, and a 15-minute BISI that we haven't touched yet, overlapping the 0.75 quarter of this daily inversion for value gap. I want to see it take those trades basically, and then get to the previous week high. Um, so yeah, hope y'all enjoy the rest of y'all weekend. Thanks for tuning in and peace.